I'm David Simmons, and this is The Mortgage Brick. So we've established who is eligible for a VA loan, and we've talked about why this program is one of the best options for home loan financing. And now let's talk about one of the more common questions or misconceptions about the VA loan. If this loan is 100% financing, why do I need money at closing? When I consult with a potential client, I explain that there are 3 components that make up how much money you may need to bring to the closing table. Number 1, down payment, not needed on a VA loan. Number 2, closing costs. And number 3, prepaid expenses, which are taxes and insurance. Down payment. Wait, we're doing a VA loan. There is no down payment, right? Right. Closing costs. You see, there are these things called closing costs that are part of every real estate transaction. And you may have heard of these, but you likely don't know what they are, how much they are, or who is required to pay them. Without getting too complex here, just know that the typical closing cost on a VA loan will be approximately 2 to 3% of the sales price. The good news is they are completely negotiable between the buyer and the seller. And that means the seller may cover these fees if you negotiate your real estate contract correctly. Remember, I have a list of excellent real estate agents if you need a referral. Finally, we have prepaids. And many people will lump prepaids into the closing cost section. And while they are technically cost due at closing, I prefer to separate them out for clarification purposes. Prepaids are simply your property taxes, homeowner's insurance, and any prepaid interest due at the closing table. Very often in our market, the seller can also pay these fees for you, again, if the contract is negotiated correctly. Hey, I hope this 3-part series on VA loans for first-time buyers has been educational and informative for you. If you have any questions at all, please don't hesitate to give me a call. I'd love to help you.